the first half of 2023. Might be a good time to start taking stock. Good morning. Welcome to Business Morning here on Channels Television. I'm Ini John Mekwa, and I'm about to do just a little bit of that on the program today. It's still a holiday. I hope you're still enjoying yourself, having your rest. But right here, we'll do business, and we start with oil business. But oil prices fell on Thursday, pairing some of the previous day's gains as investors took profits on concerns of further interest rate hikes, dampening economic growth and global fuel demand, while weak economic data in China also weighed on sentiment. Brent crude futures declined 40 cents to $73.63 a barrel, while U.S. West Texas Intermediate crude fell 32 cents to $69.24 a barrel. Both benchmarks climbed about 3% on Wednesday after the U.S. Energy Information Administration said that crude inventories dropped by 9.6 million barrels in the week ended June the 23rd, far exceeding the 1.8 million barrels draw analysts had forecast. Leaders of the world's top central banks have reaffirmed that they think that further policy tightening will be needed to tame stubbornly high inflation, but still believe they can achieve that without triggering outright recessions. Adding to pressure, annual profits at industrial firms in China, which is the world's second largest oil consumer, extended a double-digit decline in the first 5 months as softening demand squeezed margins. Facing falling prices, Saudi Arabia this month has pledged to sharply cut its output in July, on top of a broader OPEC Plus deal to limit supply into 2024. U.S. energy firms last week cut the number of oil and natural gas rigs operating for an 8th week in a row for the first time since July 2020. On grains now, Chicago corn futures rose in early Asian trading on Thursday after 2 sessions of sharp losses, with traders awaiting U.S. weekly export sales data later on today. And U.S. acreage and quarterly grain stocks reports on Friday for further direction. Soybean and wheat futures were also firmer. The most active corn contract on the Chicago Board of Trade was up 1.1% at $5.42 for half a bushel, after tumbling more than 4% in the previous session. Soybeans gained 0.7% to $12.73 for 3/4 of a bushel, also rebounding from a 2-session slump. Wheat added 0.5% to $6.72 for 3/4 of a bushel after a 4-session sell-off. Corn and soybeans tumbled on Wednesday as forecasts for beneficial rains in the Midwest tempered worries about dry condition in the grain belt, while wheat was pressured by an expanding U.S. winter wheat harvest and a larger than expected Canadian acreage estimate. While corn, soybeans and wheat were on track for weekly losses as brokers are seen squaring positions ahead of the U.S. acreage and quarterly stocks report, which is due tomorrow, Friday, from the United States Department of Agriculture. The condition of U.S. soybean and corn crops deteriorated to the worst in decades, according to U.S. government data, as major producing areas missed out on much-needed rains. And now back in Nigeria, the World Bank has stated that Nigeria has one of the highest inflation rates, which pushed an estimated 4 million people into poverty between January and May 2023. This was disclosed during the launch of the June 2023 edition of the Nigeria Development Update in Abuja. The Washington-based leader also said about 7.1 million poor Nigerians would become poor or poorer if the federal government fails to compensate or provide palliatives for them following the removal of fuel subsidy. According to World Bank data, 89.8 million Nigerians were poor at the beginning of this year. The lender also noted that additional 4 million Nigerians had joined that group, raising the figure to 93.8 million. Well, I told you it was time for stock taking. World Bank doing it for Nigeria, and not very good figures, having more than 4 million people added to the register of poor persons. Well, it's certainly not a poor one for the Institute of Chartered Accountants of Nigeria, as they officially installed Mr. Innocent Okwosa as the 59th president of the institute.
Gathered here are chartered accountants and players from the financial space for the investiture ceremony of Mr. Innocent Okwosa as the 59th president of ICAN. This ceremony also attracts family and friends of Mr. Okwosa, as well as royal fathers. In his acceptance speech, the new ICAN president promises to set the institute on a new trajectory.
We will chart a deserving future for ICAN. Surely, ICAN will be on a new trajectory this presidential year.
Goodwill messages also pouring for Mr. Okwosa, including one from Nigeria's Accountant General.
Well done, President, and I pray that this 1 year of your tenure in the office, God will help you.
Mr. Okwosa is also quick to emphasize his vision for the body.
We also hope to engage with the National Assembly, because the National Assembly is the one that makes these laws. They need to understand that ICAN brand does not need to be diluted. It has not a need to be diluted. We operate as a professional body with our peers in UK, in South Africa, in India, and we want to be able to operate like those other professional accountancy organizations. But the proliferation of accounting bodies will help to diminish that, and we hope to address that. Secondly, accounting is operating in an environment permeated by digital disruption, technological disruption. We want to position accountants to leverage on that, to improve on their practice.
ICAN is also appealing to the World Bank to approve loans for the federal and state governments in Nigeria based on their ranking of the ICAN Accountability Index. And the new ICAN president says the index was developed to promote high-quality public finance management system in the country.
Well, congratulations to ICAN there, with their new president. But let's go back to those national issues, or global issues, more like it. Remember, we talked about that central banks say they may need to continue hiking rates all over the world, not just in Nigeria or in the United States. Let's talk about some of the impact that may have on you and I, on our pocket and our purchasing power. To do this with us, we have Dr. Adesola Sumoni, Senior Analyst with Financial Derivatives Company, joins us from Reading. Hi, Dr. Adesola. Thank you for your time again. Happy holiday. I don't think it's a holiday in the UK, though.
No. Hi, Ine. Good morning. Thank you for having me on the show. Today is just Thursday.
It's just Thursday.
It's not a holiday.
You guys are not in a holiday mood like us. But anyway, it doesn't really make a lot of difference. Yeah, we're still here at work. But I mean, a lot of people have thoughts when we saw the inflation numbers from the United States and all of that, had thought that perhaps there will be a pause on the rate hike. But it seems it's not over. Jerome Powell is saying he's willing to continue rate hikes. And of course, even in the global oil space, they've called it a stubbornly high inflation. So I'm just wondering, is continuous rate hike, I hope it will not lead us into recession globally?
Thank you for that question, Ine. I think the space or the headroom where the US Fed or even the central banks across the world can hike interest rates while averting a recession is getting smaller. Like you said, at the last meeting, the US Fed paused. They left all benchmarking. They left all monetary policy parameters unchanged. Benchmark interest rate is between 5% and 5.25%, and that is because they've seen some positive signs that inflation is slowing down. Inflation for May came in at 4% from, I think, 4.9% in April. So we've seen inflation slowing down. But stuff like core inflation is still stubbornly high, still at 5.3%. Food inflation also is still stubbornly high at 6.7%. And it's important to note that this is a country whose long-run inflation target is 2%. So the fact that inflation is still quite significantly above 2% is quite significant. And the estimates put even the US Fed and analysts do not see inflation reaching 2% this year or even next year. And that is why, the US Fed President Jay Powell said that, if need be, they're going to hike interest rates just to be able to bring inflation to acceptable levels. It's also important to note that going forward, I think what we'll see will be smaller paces of increase, about 25 basis points, and less frequent increases to bring inflation down. But if you look elsewhere in Europe, for example, inflation is stubbornly high. In the UK, for example, inflation is around 8.5%. And at the last Bank of England meeting, they increased benchmark interest rates by 50 basis points, and they're likely to increase interest rates some more, so that the interest rate environment is restrictive enough to bring inflation down. And that is also true for the euro area. The ECB president, Christine Lagarde, also mentioned that inflation is still stubbornly high in the euro area, and they need to increase benchmark interest rates some more. Essentially, they're saying we've not yet seen the peak of interest rates, and we need to increase some more to essentially cool inflation. But again, like I mentioned, the room by which they can increase benchmark interest rates to slow down economic activity while averting a recession, I think that headroom is getting smaller.
Still stubbornly high back here in Nigeria, even though the World Bank has said, well, it will continue to get high until it starts to taper next year, and we look forward to those days. But just to ask, as long as the United States keep hiking interest rates, it does have an effect on the dollar, and we know whatever happens to the dollar affects a lot of countries, including Nigeria, a lot of developing countries, because most of our consumption are paid for in dollars. They're imported into the country, and consequently, it affects the value of our currency. It affects our purchasing power. Indeed, like you mentioned,
so globally, what we are seeing is tightening, right? Is a tightening cycle globally. We've seen in the US, in Europe, the European Central Bank, and the Bank of England. Overall, what it means is tighter financial condition, tighter monetary condition, higher cost of borrowing. We're going to see slower economic activity, both in developed countries and in the developing countries. We're also going to see slower capital importation, because now investors will be a little bit averse to bringing their foreign portfolio money, their hot money, into emerging markets. And that has implications for the external reserves. It also has implications for the exchange rate. You are going to see, as long as we still keep seeing this tightening or this increase in benchmark interest rates globally, is going to tighten the movement of money, particularly to developing countries, and that's going to continue to pressure the currency.
Talking about currency, Nigeria convergence continues at the forex market. So an announcement was made, a statement was released, but the impact seems, one way or the other every day, different days. Talking about the Naira.
Indeed. I mean, before the policy was made, the premium or the gap between, the I&E window and the private market is around 300 naira to the dollar. Now it is compressed, or it has narrowed to around 20 naira to the dollar. So that is like the incentive for round tripping, even though it was a bit difficult, but it was not impossible. It was happening a lot. The incentive for that has significantly reduced, right? And I mean, it also has implications for inflation in Nigeria. But unfortunately, we are going to see inflation continue to trend upwards following, this unification of the exchange rate, as well as the removal of fuel subsidy. For manufacturers in particular, before now, manufacturers' source of FX was usually a mix. Part of it was from the I&E window, part of it was from the parallel market. Now we're going to see all of that from the parallel market, or at least since the rates are, now very, very close. And that is going to have knock-on effects on the cost of commodities. And cost of commodities is we're also going to see some adjustments in demand, right? Because now the cost of the exchange rate is quite high. The demand for it would I think it would see some correction in the demand for FX, which is positive. And the central bank, the Apex Bank, remember, part of their core mandate is to maintain exchange rate stability. And even though we have a willing buyer, willing seller market now, the central bank is still the biggest seller in the market. And as a result, they can still, intervene in the markets if, supply is not big enough. They can sell a lot of dollars into the market to, bring down, to adjust the exchange rate. So I think that's what's going to happen going forward. In addition to that, I think we're going to see some loosening of some of the capital controls that were put in place before now. Things like controls on like domiciliary accounts, for example, controls on like the 41 items that could not access FX from the official market. I think those are going to go.
All right, and back here in Nigeria, the festive season, we see a lot of cooking, a lot of ram. We talked about ram yesterday. And commodities such as onion, pepper, tomatoes. Give us a little bit of breakdown of what that has done to price, and is demand really as high as it was this time last year?
I think not, right? So what is happening is when you allow market forces to act, they kind of allocate resources, right? It's now a market of is a function of willingness to pay. The cost of many commodities have increased, and the willingness to pay of many individuals and households has not increased, and so that's going to correct demand, right? I'm going to see a lower demand. But like you mentioned, commodity prices generally are trending upwards for many reasons, but three of the main reasons are: one, the removal of fuel subsidy that has increased the cost of transportation, increased the cost of transporting these commodities, which is reflected in their prices. We're also seeing the unification of the exchange rates that also is feeding into the prices of commodities. Finally, in the northern region of Nigeria, where we see growing of some of these commodities like tomatoes, for example, these are parasites. Tuta absoluta has really ravaged a lot of farms, and that has kind of significantly reduced the harvest or the supply of tomatoes and some of these other commodities, and that is why we are seeing prices jump quite significantly. If you look at the price of pepper, for example, it has tripled. It was around 20,000 this time last month, 20,000 for a bag, and it is now around 60,000. Also, the price of onion is up quite significantly by around 95%, from around 28,000 last month to around 40,000. We're also seeing some sharp increases. Sugar is also up month on month by 20% to around 40,200. And the reasons, again, like I mentioned, is due to the unification of the exchange rate, removal of fuel subsidy, and for commodities like tomatoes, like peppers, like onions that are grown in the northern parts of the country, these parasites is reducing the harvest, reducing the supply, and that's why we are seeing prices trend upwards as well.
All right, Dr. Adesola, thank you so much for your time this morning, and enjoy the rest of your day.
Thank you for having me, and you.
Let's take a break now. When we come back, NNPCL had said they will be ready to go into the market and go public by middle of the year. It's just one day left in the month of June. Let's talk about perhaps some of the factors or hurdles on their way. After the break, to stay with us. You're welcome back. Last year, when the NNPCL became a commercial entity, part of the changes was that the company will no longer contribute to the Federation account, but will pay taxes and royalties to government and also dividend to stakeholders. Well, this was after the Group Managing Director, Mr. Mele Kyari, promised that NNPCL would be ready for initial public offer by middle of 2023. That obviously is June. and this would be to expand its capital base. Well, this has got a lot of Nigerians excited. Imagine being part of NNPCL, you know, and expectant. One of those was Dr. Ndi Okereke-Onyekwe, former Director General of the Nigerian Stock Exchange and the first female stockbroker in Nigeria. We caught up with her at an event then, and she shared her thoughts.
The only way we can save NNPC is to list NNPC on the stock exchange. For all Nigerians that want to buy shares of NNPC, even if it's 10 naira, 10,000, 5,000, 20,000, you can buy and become a shareholder. And if it's that NNPC is thrown to the market now, I guarantee you that 90% of the shares will be bought by Nigerians. Then the government can keep a little controlling shares, like about 10-15% if they want. But the government really has no business running business. Government has no business running business. So if they want to NNPC to survive, for NNPC to be what it ought to be to Nigerians, it has to be quoted on the stock exchange.
It has to be voted on the stock exchange. That's the view of Dr. Onyekwe there. And it's June now. It's just a day left. And we really haven't heard from NNPCL. It would be great to have them on the show. I did try to reach out, but I didn't get a lot of response. So NNPCL, we would like to speak with you about your preparedness. Or, I mean, when you be going to the exchange, Nigerians are eager to be part of this great company which controls the major resources of Nigerians. And, I mean, we had a bit of some of the advantages or benefit there. But let's try to speak from the eye of an analyst and see perhaps some of the hurdles on the way of NNPCL that have stopped them from listing, even as they promised. By middle of 2023. Joining us for this conversation is Calvin Emmanuel, joins us from our Abuja studio, Chief Executive Officer of Dairy Hills. I must say, Calvin, you are the one celebrating the holiday. I am just at work. I mean, that's so intimidating, your look today.
Good morning. Happy Eid Mubarak to you and all my Muslim friends who are celebrating Barakah de Salah today, Thursday, the 29th of June 2023.
Yeah, thank you so much, Calvin. And thank you for taking time out from your celebration to come on the show and discuss this very serious matter. Why do you think, in spite of the promises of NNPCL, the GMD had promised that by now they'll be ready to, you know, list, we'll see an IPO, and a lot of Nigerians were looking forward to it. What do you think is holding them back?
Thank you very much. Very interesting conversations, and I agree with the sage, Dr. Okereke-Onyekwe, the former DG of Nigerian Stock Exchange, before it was demutualized many years ago, that the solution to bringing NNPC to become what it should be is it listing on the international markets. Listing on the equity capital markets. Now, it's important for us to understand that post-PIA, the PIA that says, for example, as soon as the PIA is signed into law by the former president of Nigeria, August 16, 2021, the PIA is supposed to go into full effect. The implementation of the PIA did not start in earnest. You notice that in 2022, the Finance Act 2021 was provided, and the provisions for the PIA was practically suspended, most of it at least. In 2023, if another Finance Act was provided, most of the provisions for the PIA was suspended. The NUPRC, NMDPRA, NNPC, that is now a private company, they're just beginning to come into the implementation of the Petroleum Industry Act. And you could see that, for example, with the most contentious one that was announced by the president, the suspension of the regulation of petroleum prices according to sections 205(1), 2062 of the Petroleum Industry Act of 2021, that has seen petrol prices go up about 280 naira. And I expect also to go further up to between 650, 700, and even 750 naira per litre in some parts of Nigeria. So for me, when you look at NNPC, you see there are a lot of legacy issues that NNPC has. It had, especially before it went to become a private company based on the provisions of the PIA, and then before the policy-making powers of it was taken away from it to the regulators and the Ministry of Petroleum, why they focus on doing business. And you could see where Dr. Okereke in UK said something that I always say, that in truth, government really has no business doing business. NNPC has legacy issues, and one of those legacy issues that it cannot carry to become a public limited company is the issue of the moribund refineries that it has. 4 moribund refineries in Port Harcourt, in Warri, in Kaduna, and I've forgotten where the 4th one is located. For me, in my opinion, they are moribund. It's time for the government to strip those refineries into scrap and sell them off and stop throwing turnaround maintenance. If you look at the balance sheet of the NNPC, you see about somewhere between 96 and 100 billion naira per year goes into welfare, compensation, and pension for staffs of 4 dead refineries that are not refining 1 litre of petrol. I don't think if you quote NNPC on the London Stock Exchange or the New York Stock Exchange, or you quote it on the Nigerian Stock Exchange, for example, as a public limited company, any sensible institutional investor will want to buy shares when he looks at the prospectus and he sees that it has 4 dead refineries that are taking 100 billion naira or somewhere around $125 million per year, and it's not bringing back any revenues to the business. I don't think any sensible investor will want to put money into that. So for me, that is one major issue NNPC has to tackle. NNPC also needs to address the issue of the structure of JV contracts, a joint venture, and when it comes to the production sharing contracts that it has, and how it relates to the fact that before the implementation of the PIA, it was a state corporation. Now it's a private company. Does it make sense for NNPC to stay as a non-operator and then have block owners? NNPC owns a few blocks, have block owners, and then have international oil companies and national oil companies as operators. And then it has this structure where if, for example, it gets 900,000 barrels of crude oil, it has to amortize the cost of recurrent OPEX and amortize capital expenditure on operating that block to the operator of the block, which is the international oil companies and national oil companies. NNPC needs to ask itself the question, do we want to build, as a company, build the expertise to actually become an operator in the market and compete with the IOCs? It also needs to ask itself the question on if it wants to stay in OPEC, because you can see that at the last OPEC meeting, for example, OPEC capped Nigeria at 1.38 million barrels per day. If Nigeria, for example, develops the capacity to produce 30 million barrels per day, and for example, you have your cap at 1.38 million barrels per day and you can't export more than 1.38 million barrels per day, how do you go around that, considering that the forward guidance of OPEC for 2024 to 2025 says that OPEC is going to maintain its cuts at somewhere between 1.5 and 2 million barrels per day, considering that OPEC members produce about 31 million barrels, 31.5 million barrels of crude oil per day, as a means to maintain oil price at not below $75 or $80 per barrel. So these are questions that you need to ask before you decide and say you want to go to list on a stock exchange, either it's in Nigeria, or it's in London, or it's in New York. In my opinion, NNPC has a lot of house cleaning to do, and it has a lot of business process reengineering and restructuring that has to be done within the company for you to even consider going, because if it goes the way it is, investors, and especially institutional investors who know a lot about investments and the markets, will not touch it.
Okay, so it sounds like there's a whole lot to be done before NNPC can be ready, to go public. But a lot of Nigerians would have expected perhaps Mr. Mele Kyari, just the way he said, they were going to be ready for June, could also come out to speak to Nigerians to say, oh, we are putting some things in order, we are restructuring from the public company we were, from the government company we were, to a commercialized company. Don't you think that will also mean carrying the people you expect to be part of this company along and winning their trust, along the way?
Well, I think it's important because you could see that there is a trust deficit between NNPC and the Nigerian people. Nigerian people don't trust NNPC with what it says, because especially when it comes to the administration of direct sale, direct purchase, DSDP, and petroleum subsidy. There is a lot of gap, between the company and the people. There are lots of issues that the company needs to come up to answer to on how that whole under recovery on petrol subsidy was managed. But you also have to consider the fact that NNPC was a state corporation and it was getting directions from the government before it was privatized to becoming a private company. And it's important for us to understand that it's now a private company, and the way, for example, like Dr. Okereke in UK said, the way for you to fully move away from that shadow of the Nigerian government is to sell equity in the company, maybe 20%, maybe 25%, because it needs a lot of capex to fund projects. It has the Nigerian gas, Nigerian-Moroccan gas pipeline. The FID is $25 billion. NNPC is supposed to contribute $12.5 billion for the project. It doesn't have the money. NNPC currently has like payments, outstandings to oil traders for PMS deliveries to Nigeria in a few billions of dollars, maybe $2 to $3 billion it has to pay in outstanding. It has the floating LNG project it wants to do with the Norwegian company Golar. I'm sure that's a counterparty financing project that NNPC has to contribute to. These are capital expenditure projects, FID, financial investment decisions that require billions of dollars. Where is it going to raise the money from? The Nigerian government does not have the money to give it. Instead, the Nigerian government is expecting you to remit money. With the reunification of the Naira, for example, you see very well that the Federal Account Allocation Committee, FAC, has moved its target for the USD peg, for which NNPC has to remit money to the Federation account at the CBN, to the ICAN rate, which means basically that if, for example, just for example, on crude oil receipts, NNPC was remitting $1 billion. Under the former regime of official peg and black market, where you had a 63% black market premium, NNPC was remitting somewhere around maybe 463 billion naira to the government. Under this new regime, which is a float and reunification, NNPC is obligated to remit revenues to the Nigerian government at the I&E rates, which has aligned with the spot rate at the last day's close. So definitely is more revenue for the government. So if the government is expecting money from NNPC, how is, for example, NNPC going to fund the project that it has? And so this is the reason why it's important that for the sake of improving the revenues Nigerian government gets, oil revenues in terms of that revenue to GDP ratio, and balancing their macroeconomic and the fiscal side of Nigerian federal government finances, for the sake of stabilizing the markets in Nigeria, for the sake of building trust with the people and maximizing the potential of NNPC for it to compete with its peers around the world, like Saudi Aramco, for example. You really need for NNPC to do house cleaning and go get investment bankers to do book building for it to float as a public limited company on the stock exchange and have investors bring in money so that, its internal controls and corporate governance will improve. It's also important for me to say, and I need to say this because the president sacked the boards of MDAs, I think a week ago, before he traveled to France. It's important for me to advise the Nigerian government, especially the president, that in constituting the new boards, non-executive boards of MDAs, and for example, of course, NNPC is going to have a new chairman very soon, it's important to prioritize merit over political favors to party members for helping you win elections. For critical places like NNPC, CBN, NCC and the likes, for example, for NNPC, you need a chairman of the board and members of the non-executive board who are very important for, compliance, audits and controls to the executive management of NNPC as a company. People who have cognate experience and administrative and leadership skills, and not people who you're compensating because, we were friends 20 years ago or you helped me win an election.
All right, Kelvin, thank you so much for those suggestions. It sounds like a whole lot of hurdles ahead of the NNPCL before they can get to the level of listing. But we'll certainly look forward to those days when NNPCL will be public and Nigerians can buy into it. Thank you so much for taking time out from your holiday and sharing this information with us. Kelvin Emmanuel, Chief Executive Officer of Dairy Hill Limited. Thank you.
Thank you.
The market is on break, but Anite is not, so he has to come in here and give us some information. I don't know where he got those information from, since the markets are on break.
Yeah, still happy holidays to you and some of our viewers.
Yeah.
Well, the market is still on break, but this time I think I'll be taking a look at the other market which we've been skipping. That's the unlisted securities market. But I'll be talking to my guest who will be telling us more about the fixed income market, because that market seems to be a little bit making some pullback. And then, of course, there's so many issues to be talked about within that segment.
All right.
So we are with the unlisted securities market. That's the younger brother, what you might call the younger brother of the Nigerian stock market, the equities market. It was down by 0.23% in contrast to what it gained, 0.51%, which was on Monday. So this is the closing figure for Tuesday's trading session. It was down, and no thanks to losses from Central Securities Clearing System and Friesland Campina WAMCO. They had that effect which made the market's index to pull back by about 0.25%. But the market capitalization is still made the rebound. It had fallen below the 1 trillion naira mark, but at the close of Tuesday's trading session, it went still back to the 1 trillion naira mark, but still recorded some profit taking on that counter. Now let's look at the other side of that market. The volume there, the total number of volumes carried out there, the total volume of securities traded there was down by nearly 89%, nearly 90%, correct me, 89.95%. Same thing for the value. It was also down by more than 91%. Total number of deals carried out there, 29, and the number of securities traded, just about 8. Now, I said the advances there, there was no advances, but we had decliners. Now, for the equities market, we had a market having a 15-year high, but we'll be talking more about the equities market tomorrow. But for now, we're focusing on the fixed income market, and we have Caleb Alimi, Chief Dealer at Providence Bank, to talk to us about that market. Thank you for joining us, Caleb.
Good morning, Anita. Thank you for having me.
Okay. Yeah, I know yesterday we talked about the fixed income market was still within the fixed income market, and this is because about 2 weeks ago, the new administration, the President Bola Ahmed Tinubu, had announced what you might call the Tinubunomics or the Batonomics, which side of the divide you belong to. But the unification of the forex market had one impact on the equities market. But what impact is it having on the fixed income side, particularly when you also take a look at the forex market?
All right, so for the fixed income side, the major impact we're seeing is the liquidity play, right? You know, in addition to all of the pronouncements of the CBN in reaction to the president's directive or policy direction, we've seen a CRR normalization. What that has, introduced back to the system is a lot of liquidity. On the back of that, we've seen demand across the curve for both treasury bills and bonds as well. We've seen bullish sentiments across the curve because market is often up northwards of 800 billion on a daily basis. Now you have banks awash with a lot of liquidity, and what that is doing is it's impacting on the yield curve, generally. So we're seeing demand for treasury bills because bank have to then plug idle cash into profitable use. So we're seeing demand for treasury bills. We're seeing demand for bonds, both at the short end and at the long end. We expect this to continue into the near future, except there's sort of like a policy change from the CBN. Other than that, if the direction remains the same as per CRR normalization, we'll continue to see sort of like a downward trend in yields, except there is an increase in supply of, government paper, either treasury bills or bonds, to sort of like soak up this liquidity. In addition, tomorrow there will be an NTB auction. It should have held yesterday, Wednesday, for settlement today, but because of the 2 days public holiday, that has now been shifted to tomorrow, and it will settle tomorrow as well. I think they're offering close to 200 billion across 3 maturities, and we'll see, an interesting play at that side as well. Speaking about the forex market or the FX market, we're seeing sort of like a convergence, of the exchange rates. NAFEX has been stable, and it has also been stable around 765 to sort of like 770 over the past 1 or 2 weeks. We expect that to continue. Also, we expect, more dollars to come into the system to just support market around those levels. Yes, there'll be occasional spikes and what we can call abnormal rates, where you've probably seen the news, maybe an 800 here and there, but largely a lot of trades are happening around that 760 to 770 band.
Okay, Caleb, speaking about this fixed income market, and we see investors are really coming into the equities market, but what is their sentiment, particularly as the first half of the year will be ending by tomorrow, and by next week we will be entering a new half, the second half of the year. So what do you expect investor sentiment in the fixed income market? How do you expect it to turn out?
We expect investors to continue to chase alpha, that's to chase positive return. And owing to that, we'll continue to see demand for fixed income securities across the yield curve, both for short-dated bonds and, treasury bills as well.
Okay. So, Caleb, we'll leave it there. And, of course, our eyes are always on the market. That was Caleb Alimi, Chief Dealer at Providence Bank, giving us details about the fixed income market and what to expect for the new second half of 2023. So, tomorrow's last trading day. What's your take?
Well, investors will be back on the market. That's my take. All right, Adete, thank you so much. Okay, now let's head to London, where, as Adesola had told us earlier, there's no public holiday. So we do have Juliana joining us from London now. Juliana, good morning. It's not a public holiday here, so you guys are not like us. But anyway, so we see some disturbing figures for 2022 showing that the NHS lost equivalent of nearly 75,000 staff to illness, and that of course is a record high. And I'm just thinking, what kind of illness, what caused this, especially when we had a lot of strikes even in last year running into this year?
That's absolutely right. Good morning, Ini. We have seen some data which was exclusively obtained by the BBC, just looking at some of the issues that the NHS are currently undergoing. And we know that there have been significant issues. Of course, they were there before the pandemic. They were exacerbated during the pandemic years. And now the government, alongside union bosses, are trying to find a way out of it. And according to bosses at the NHS, the institution is being buried under an unsustainable cycle of staff shortages and fatigue and burnout. And these are some of the issues that have led to some of the walkouts that we've seen. And now, going back to the report that was released to the BBC this morning, they've been looking at data affecting staff absences during 2022, and it's at 5.6%, which you say is the equivalent to about 77,000 people taking time off for sickness. And this comes alongside having data showing that there are already over 110,000 people understaffed. So it is a significant issue. That 5.6%, if you compare it to the private sector, where absences are about 3.6%, clearly it shows that something is wrong. According to some of the findings that I read this morning, in terms of the absences, over a quarter of them amount to mental health, which is a huge issue. Let's not forget, during the COVID years of 2020 and 2021, Brits were encouraged to stand outside of their house once a week and clap for NHS workers. And they were clapping because these workers were subject to pretty serious conditions that they were working working in. We've got the COVID-19 inquiry undergoing in the UK at the moment. And we know that Britain had one of the highest death rates in not just Europe, in the world when it came to COVID-19. And lots of those doctors that were working on the front line during that time are suffering with mental health, which is why they are having the time off. Also, as well, a significant issue for the labour market, not just within the institution, but of course across the economy, is long COVID. And that is something that MPs have failed to address in this country. But it is a serious issue. Again, the NHS is understaffed. Lots of appointments that were pushed back during the pandemic are still not being allocated. So staff that are suffering with long COVID conditions are not able to get back to work. So yes, a pretty difficult reading for the Health Secretary Stephen Barclay and the Prime Minister Rishi Sunak today, but it's definitely something that's not going away anytime soon, and it will be something that needs to be addressed.
Obviously, it has to be addressed, especially not that others are little, but I mean, the issue of mental health obviously has to be addressed. But another worrying story coming from the UK is Thames Water is talking about fears of collapse. That would be disastrous for a lot of residents over there.
It would be disastrous for a lot of residents, which is why we've heard from the British government yesterday and again this morning that they will not let Thames Water collapse. They're currently in crisis talks with Ofwat, which is the regulator for water companies in this country, as well as DEFRA, the Environment Agency, and bosses at Thames Water, because of the announcement that was made yesterday, as soon after their chief executive officer departed about 24 hours ago. We realised that Thames Water was sitting on a debt pile of over £15 billion. And this is not new. I think the British government have known about this for several years. Thames Water have been in trouble for years due to mismanagement at the very highest level. And now they are going to the government asking basically for a bailout. And that is going to be a hard ask for the government, who are already struggling with high interest rates, high inflation. We know that the economy at the moment is just trying to limp away from a recession. But if indeed they do have to find a way to bail out Thames Water, which is the biggest water company in the UK, serves about 15 million households, not just in the capital city where I am, but across the wider region, it is likely that this money is going to come from the public purse. If it doesn't come from taking money elsewhere, then unfortunately it will mean that bills will have to rise at a time when, of course, we are going through a cost of living crisis and bills are already extremely high. So this is a significant talking point in London and in Downing Street today, and I'm expecting some sort of update possibly before lunchtime.
To be positive, although, as you noted, it's hard times for both the government dealing with all the macroeconomic issues, inflation, interest rates, and then having to come through for Thames Water. But thank you so much, Juliana, for those details. All right, let's move over to crypto now, and Ladi Williams walks in with information from the crypto space.
More info. And,
more info. I hope you have a bit of good news, because I mean those stories from
news.
UK.
Can I call this good news? First, let's take it back now to January, the beginning of 2023. Bitcoin was trading about $16,000. And
now we're doing 30, yes?
Over 30,000.
Oh,
at
wow.
this point. So slow creep, but it did go up. Pretty much.
But will it stay up?
Well, that's the question. And what happened for the second half of 2023?
It's a good time to take stock.
It's a good time to take stock, apparently. And looking at the market now, we see it's neutral. We moved away from
that was a fast move. Yesterday you were in 60.
Yeah, exactly.
Great.
So
and now you're neutral.
With all the volatility and what we're hearing from the central bank, bankers globally with hikes, it's like risk off, at this point. And we're seeing investors react to that right here, and it's neutral. That's what we're seeing right now in the market. Let's look at the color of the market today. How's the color looking? Just Bitcoin, a couple of other cryptocurrencies in the green. See Ethereum is the red, USDC, stable coin, that's in the green, USDT, another stable coin, in the red. So it's kind of a mixed picture we're seeing in the market today. Looking at Coin 360, let's look at the top cryptocurrencies that we track now. We see Bitcoin at the top gainers counter. Zcash is topping that counter, up by 1.26%. Minor gain, just a marginal gain we're seeing. Lean gain is this, $29.95 for Zcash. Synthetics is 69 cents, up 1.20%. So we're seeing lean gains this morning with the market looking for direction right now. Let's bring in Gilbert Jopata now, financial market analyst. Hello, Gilbert.
Yes, good morning, Mr. Ladi.
Good morning, Gilbert. So, yeah, tomorrow, that's the first half of 2023, comes to an end. And we've seen how Bitcoin has performed, about $16 to start the year in January. And fast forward to now, and we're at $30,000, about $30,300. And we're seeing a lot of volatility, at that level. But looking at what we've seen so far with price action, has Bitcoin really outperformed in the first half of 2023?
The first half of 2023 has seen Bitcoin move in a slow but steady upward trend. We started the year at about 16,000 and we've grown to about the $30,000 as of today. And this is a significant 80% profit gain so far in 2023. This is a significant increase, ignoring the short-term drawdown from FTX bankruptcy, Gemini drama, and even the SEC food. Which caused the price pullback, but yet we did not break the downward channel and still respected the 25K inverted head and shoulder neckline. And it suggests that the market is becoming bullish. This is a bullish market, and there are a certain number of triggering events that could have been responsible for this, from macroeconomic becoming friendly to increasing adoption by institutional investors. BlackRock, which is one of the biggest investment company, filing for Bitcoin ETF. MicroStrategy has added an additional 12,333 BTC to its position, with growing interest from retail investors after figuring out that the worst of the last bear market was over.
And looking at, the second half, that starts 1st of July. What are you expecting for the second half of 2023? Is this still going to be, regulatory issues that we're seeing in the crypto industry, or do we see more tailwinds for the crypto industry?
Okay, there are a whole lot of regulatory concern, which I think it's a good thing, especially that of XRP. And I think the trend or the outcome of XRP is going to create more of a clear guideline for what we will see for regulations in the market. And also, we also have that of Binance, which is taking place. But overall, the outlook for Bitcoin in the second half of 2023 is still positive. And there are a number of factors that could impact this price for the second half. One, I think, is the overall state of the global economy, which could lead to investors seeking out for Bitcoin, and more other investors will also seek to diversify their portfolio to Bitcoin, and continuous adoption by institutional investors. At technical levels, 35K to 40K and 45K is a visible price action for Bitcoin for the rest of the year.
All right, definitely all eyes on the second half of 2023. Let's see if it's going to be risk on or risk off. Thank you so much, Gilbert Jopata, financial market analyst. Thank you.
Thanks for having me.
All right, let's look at the top losers now. See, come there. Topping that counter, 9.40% down. Pepe, that's the new meme coin, new kid on the block in the meme industry there, 7.63%. We're seeing profit taken on that. Render token, $1.91, down 5.91%. So that's how the market is looking today in its neutral. And now, all eyes, what's going to happen in the second half of 2023, talking about Bitcoin price action, and I want a number from you now. What price are you seeing?
I don't understand why yourself and Aneti are putting me, in a tight corner.
We need your crystal
ball. And asking me. I mean,
your crystal ball.
It's your markets.
Yeah, but
I only step in every once in a while, so I don't understand why. Okay, so
I know you have a crystal ball somewhere, so I want
it's right under this table.
Exactly.
Okay, so just give me some time to check under the table.
All right, then you give me a number at some point.
Tomorrow.
All right.
See you at 1:30, Ladi. Thank you so much. Well, that's it on the program. I hope you're enjoying and make the most of this holiday. Don't forget, the holidays end today, so tomorrow I have to get back to work. I cannot imagine how tomorrow will be, how the roads will be like tomorrow. I have been thinking about it since morning. It was really good this morning on Lagos-Ibadan Expressway. I wonder what it will look like tomorrow. Do I have to wonder so much? I think I have an idea. God help me. Well, thank you so much for being a part of it. Don't forget to join Ladi 1:30. He'll be back here. I'll be back tomorrow with another fresh episode of Business Morning. But you can watch this again on our YouTube channel. I'm John Mekwa. See you tomorrow.